Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the market's dusting off the cobwebs from the long weekend, and we are starting to see a few things take shape. Now, at the moment, if you scroll down to the weekly market insights, you can get a bit of more detail around what is coming out today. You can see the ISM Services PMI, right? The non-manufacturing PMI numbers. The other sort of part of the puzzle from the manufacturing numbers that we saw on Monday, okay, and they were slightly weaker. So it's going to be interesting to see how these numbers drop. Now, we did have inflation numbers out of the Eurozone, just slightly higher, right? But we didn't see much of a reaction in the currencies, and or did we, right? This is where it comes down to what we're looking for. Now, I'll come in and explain that in a second, but just today, GDP numbers out of Australia. Okay, I'm not holding my breath. The If you looked at the interest rate tracker, you'll find that the RBA is all but holding rates on hold, 96%, right? So the GDP isn't going to change anything there unless it was catastrophic, but the numbers haven't suggested that's the case. So don't get overly excited about that. Now, what we do have is we have some better US numbers coming out, right? The industrial production numbers. And here's those ISM Services PMI, right? The non-manufacturing PMI numbers. This is going to, as I said, this is going to be interesting. It's the second part of the puzzle for the PMI numbers, and it could really. We see weakness here. It's going to firm up the cutting sort of opportunity there, or expectations from the Fed, and we should see the dollar roll over a bit. Now, let me just come back to that. The dollar rolling over. Now, if you have a look at your charts, this is where it comes back to trying to be as objective as possible with your technical analysis. Because if you draw the trend lines in the wrong place, it can give you the wrong impression around what's actually happening, right? Let me just explain that, right? So, actually, let me just come back to this first. You can see here euro on a short-term basis is going up, right? And sterling, it's broken down. Aussie is going up. And at the moment, we've got a short-term trend line there on Kiwi going up, dollar CAD down, right? The commodity currencies haven't given up their up the ghost just yet. Now, let me just show you what happens though. If you redraw the trend line too early, right, all of a sudden you're like, well, we've got support and resistance. It gives you a more of a visual of it trading sideways, which it sort of does as it moves in an uptrend, right? You see the up move, a retracement, sideways, up. And then this continues all the way through an uptrend. You get a little bit of a clean out, then it kicks in again, right? So what we're seeing is the normal price action that you get with the trend. What we're missing is the real good momentum from the fundamentals, right? We've just had a really long weekend across the global markets, and they are sort of kicking back into gear. Inflation numbers in the Eurozone were slightly stronger. I tell you, you know what? Objectively, you got to start to think that euro is looking good against the dollar. Now, sterling, okay, looks like a bit of a bloodbath. Aussie is starting to take really nice shape. GDP numbers that are as expected doesn't rock the boat. Maybe that supports a stronger Aussie. And the Kiwi, well, it'll just follow its antipodean sort of buddy there, the Aussie, right? And then you've got dollar CAD sort of drifting down. Oil is moving between sort of 50 sort of or $60 and 58. That's what we want to see. Oil appreciate and dollar CAD will continue down. So just be careful where you do draw the trend lines, because it could give you a bit of misinformation here around what's going on. And why I say that, because when you come back into trying to isolate the trading opportunities, come back to the signals, right? I was looking yesterday really closely at euro against the Aussie and Kiwi, right? And I was sort of just waiting and just checking it out. And then what happened was euro sort of drifted a little bit lower on the short-term chart against the Aussie, and pretty much the same against the Kiwi, which tells me there's a bit of strength in Aussie and Kiwi at the moment, right? Euro's going up, Aussie and Kiwi are both going up. So you know what? The dollar pairs are probably back in the swing of things, but just know which ones you're looking to trade, right? And that's where you can connect the economic numbers, because you're like, okay, so euro's going up. What do we need here? Well, what would be good is if we get weaker services PMI and industrial production numbers out of the US, that's the same as getting stronger euro numbers, right? Weaker numbers here supports a stronger Aussie, Kiwi, and euro, right? And then on top of that, as I said, I don't see much of a shift in the growth GDP numbers in Australia, but if they are as expected, then we may get the numbers that we need to sort of support that Aussie move because the market is a little bit tentative as it comes out of the holidays. Trump's sort of walking around, you know, like spruiking the job, the Fed chairman job, right? He says he's not going to make any decisions till early 2026, but I think he's having a meeting at the moment with Hassett, and he's sort of introducing him as the here comes the new Fed chairman, right? Like he cannot help himself. Anyway, we want Trump to sort of stay out of the way as much as possible so we get the normal flow back in the markets. To me, you know what? We saw a nice retracement in dollar Swiss. Looks like it's starting to roll over. You know, we saw that little dip back towards support in euro. It's starting to edge up a little bit. I can start to feel like we're going to start to see a sort of move towards the top side. Dollar down, euro, sterling, Aussie, Kiwi up. Sterling, I'm not sort of really getting involved because it's looking like it's been bashed up and recovering in hospital. Right, that's how it looks. So that's where we are, guys. It's more about just remaining patient. Okay, just be patient. Trading the markets isn't about sort of hitting the markets every day. It's about waiting for the best setup. So just be cool and let's just see how the numbers drop. We have got the start of the trends, and that's where you just keep an eye on the signals, right? As I did yesterday, I did that sort of short video just to show you you can come in and sort of quantify what's actually happening. And as I mentioned the other day, euro and sterling not moving the same. It's a rare event, right? And obviously, sterling has got its own domestic economic issues, right? And that's the battle there. So I'm taking sterling off the table, but at the same time, it probably doesn't warrant us taking the euro off. But just keep a close eye on things, right? Now, what I do like a lot, euro bullish, and these two things work hand in hand. They're like the Swiss is like its stepbrother, right? If euro's going up, dollar Swiss should be going down. And if they are, that's a really good sign, right? It gives you confidence to go into the market. And all we need to do is line up the economic fundamentals. Today we've got Aussie GDP and US numbers. We've got and with the dollar, we've got the ISM non-manufacturing numbers, otherwise known as the services PMI, and also the industrial production. So we've got opportunities. We're just going to wait for them to materialize. The markets or the charts want to move. We're just going to wait for the timing. All right. Anyway, that's as much as I can help you just at the moment, and let's just see how it plays out. Keep an eye on the Discord because we will. If anything does come up, you'll see it here first. All right, guys, have a good one. All the best. Cheerio.